I just want to welcome everybody to Enterprise Tuesday. My name is Matthew Grimes. I'm one of the academic directors of the Cambridge Judge Entrepreneurship Center. For those of you unfamiliar with Enterprise Tuesday, this is a critical part of our center in which we really try to, not only create knowledge, but also community and action around important entrepreneurial issues. So I want to welcome you in particular to part 2 of our 4-week series exploring this intersection of entrepreneurship and climate change. As I tell my MBA students, the challenges that are posed by climate change not only present business with obligations to act, but also massive opportunities to act. And today we're exploring both the obligation and opportunity this poses for VCs around the world. And we have a stellar panel to guide that conversation. So at this point, I want to introduce and then pass it over to the chair of tonight's event. So Naveed Chaudhry, co-founder and head of the Greenhouse at the Center for Climate Change Innovation. Naveed runs the Greenhouse and Climate Launchpad. He manages a range of climate positive companies in sectors such as ag tech, energy, mobility, AI, eco-materials, and many others. So we're very fortunate to have Naveed to chair this amazing panel. So at this point, I'll turn it over to you, Naveed.
Thanks, Matthew, much appreciated. Saves me time from introducing myself as well. So thanks everyone for joining. Really great to have you all here today. So obviously the agenda for today is, the VC industry and how fit it is to actually tackle climate change itself. So obviously, as we all know, climate change will affect and in some cases transform, huge aspects of our lives. And the VC industry itself, we don't think will be exempt from this actual transformation. So hopefully with the guests today, we're going to learn about how it's already adapting. We'll understand a bit more about what needs to be developed for the VC industry to actually play the role it's played historically, which is backing innovation from a starting point of uncertainty. And we'll also learn from the panelists about the skills that we think are needed and how competitive the industry remains today. So I'm going to pass it around to each of our panelists to introduce themselves. They'll tell you a little bit about their approach to investing, and each of them will also tell you about what's distinctive about their firm's approach to investing in climate-focused startups. So going by my screen, I'll pass over to Yair first of all to kick off.
Thanks, Naveed. It's a pleasure to be here today. My name is Yair. I'm the co-founder and partner of BeyondBlack. BeyondBlack is a venture fund that invests in groundbreaking technologies that help reduce greenhouse gases emissions. Our goal as a fund is not just to generate a financial return on the investment, but also that each of them should be able to have the potential to significantly reduce carbon emissions. And by significant, what we mean is that each one should have the potential to reduce at least 100 million ton every year. And just to put it into perspective, that's about the size of the emissions of Belgium or a quarter of the UK greenhouse gases emissions, or if you wish, taking off the road 20 million cars every year. In this regard, to your question about what we do a little bit different is that we put this carbon math at the top of our investment criteria, and we do a very rigorous analysis on the reduction potential that of every company before we invest. And therefore, we even have in the company a head of carbon math position that is fulfilled by a professor, and we take it very seriously. Thanks, happy to be here.
Thanks, yeah. I've got Caitlin on my screen next, and then Hampus and Pippa.
Awesome. Thank you for having me here. And it's great to be here alongside these other panelists. I'm Caitlin. I'm from a background originally in engineering and then moved into finance in renewable energy and then deep tech investing. And I am now at Counteract, and our approach is what makes us unique. So we focus specifically on carbon removal, with our target being purely around the potential for catalytic change in this space. And so how we do this is by basically targeting 3 key pillars, which are insights, innovation, and investments. So we will develop out a lot of research by partnering with universities or developing it in-house. We currently are recruiting for a research analyst, so have a check if you are interested. But yeah, where we see that there are huge barriers in the space, we will invest in solutions that are there. And if there aren't solutions, then we would essentially like to assemble teams to try and target those. And the criteria that we look for are, is it catalytic? So i.e., does it have the potential to scale to 0.5 gigaton by 2050? Is it diverse? So is it part of the nature-based all the way to engineered or hybrid of solutions? Because quite frankly, we need them all. Is it regenerative? Because we believe that these solutions need to be able to sustain themselves when they are at scale. And is it responsible? So we don't want to help facilitate more fossil fuels to be removed, and we also want to try and encourage co-benefits for society and environment. And yeah, excited to be here. Thank you very much.
Thanks, Caitlin. Really interesting. And passing over to Hampus, please.
Yeah, so after these two super science-based approaches, Pale Blue Dot has a less science-based approach. We are a very classical venture fund, but we only invest in climate tech. So we do anything. We actually don't do only carbon removal or look at a certain CO2 metric. And we come from a very kind of entrepreneurship background. So all of us are very, very focused on helping and scaling the company and reaching this sort of right size. And I think that means that we have invested anything from satellite technology that works with forest fires to local food production. We've kind of very, very broad in that aspect. We've invested rather early stage. So from $250,000 up to roughly $2 million. Yeah, I think that's like, I'll definitely talk more later.
Thanks, Hampus. And last but not least, Pippa.
Hi, thanks again for inviting us all to join you tonight. It's great to have the opportunity to be back at the Judge Business School. I haven't been there in person for a long time. So, so I'm the founder and director of Zero Carbon Capital, and we have set up a fund, Zero Carbon Fund, which is focused on transformative hard technologies in the climate space. So we're looking for things, we're in the 0.5 gigaton camp too. And by that, we mean that, that is our first filter when we're looking at an opportunity. And of course, we don't think that every single one of the companies we invest in will actually deliver 0.5 gigaton a year at scale, but we have to believe that they are possible, that they are capable of it when we invest in them. And I can talk a bit more about that later on. We're focused on hard science, so the atoms rather than the bits, and we're focused on investing in the UK as well. Once we've got through those filters, we look for vision-aligned founders. So, some of the technologies that we're looking at, as Caitlin alluded to, could be used for different purposes. And we want to make sure that when the pivots happen, we're going to be happy with where we're going still. And so that's something that we really look for, is that the founders really want to build a big company and they really want to solve climate change with what they're doing. We are an early stage investor, so we're happy to lead, and we're also happy to collaborate with others. Our average check size is 200K, so of course we have to collaborate with others. And we see that as the biggest way in which we can help our companies is by getting in there early, perhaps when other investors are not ready to take the level of risk or technology risk that the company has, and then shepherding them on their way and handing on to later stage investors who, when the technology is more proved. We see this as a huge opportunity, and we're very much a profit because of purpose, not a profit in spite of purpose type investor mindset.
Great, thank you, Pippa. And yeah, great to hear from all of you. It's clear that you're all very motivated by what you're doing, and investing in solutions that are hopefully driving change in what we need to do. I wanted to kick off thinking about venture capital quite broadly in relation to climate change. So members of the audience will, I'm sure, have come across the industry. Classically, when we talk about venture capital, we think about Silicon Valley, Facebook, Twitter, software investments, and what those have gone on to do. What I'd love to hear from some of you is about, why is venture capital itself important when it comes to climate change? There are lots of actors, there are lots of players in the climate change ecosystem. Venture capital has done many things well historically, but when it comes to climate change, you know, how important a role does it play today? How important a role do you think it might play in the future? And Pippa, I'd like to bring you in first this time to talk about
Great.
that.
Well, I'm fortunate to get to go first on this one. So, you know, as Naveed knows, I started investing as an angel investor when we were living in Palo Alto, the heart of Silicon Valley, where, you know, everybody's a VC and it's in the water, you know, one would think. And I got really convinced about investing in early stage decarbonization technologies there. And, you know, I was surrounded by all these VCs who were focused on software. Now, I think this is important to kind of hit early on because, you know, there is now a perception that that's all VC can do. And I think it's not accurate because what VCs are really looking for are something that fits their personal vision of what change is going to be. And so for the last, I guess, 30 years, that's been dominated by software, but that wouldn't have happened if a handful of VCs who were based in Silicon Valley hadn't set out in the 1990s and 2000s and said, software will be everything, and bet on that. So, you know, we see, you know, and that's happened. So back then, the idea that the top 10 companies in America would be, you know, software companies, technology companies, digital technology companies would have been unthinkable, you know, absolutely unthinkable. So, you know, back then, the biggest companies in America were energy companies, among others, and huge manufacturing companies. So, you know, the idea that VCs aren't able to back other kinds of growth and aren't able to see other kinds of growth, I think is wrong. It's just that our current paradigm is that VCs are all about software because it's scalable. Now, software faces other challenges, right? It can be difficult to be defendable if you're building a software platform, an app, a website. You can't patent it probably until you've got network effect or brand. Maybe you don't have anything that's that can't be copied. And there's, you know, a lot of software companies who've died because of fast followers who did it better than them. So I guess what our vision of how VC can help climate change is by having a vision and a thesis that they are willing to invest in that involves being net zero at 2050. And I think that's super important. And that might be a mix of technologies. It might be a mix of geographies or sectors or company stages, and all of those are needed, right? We need everything. But I think it's important for us to have that rigor around, you know, is it going to be something that is helping us along that path or accelerating us along that path? I hope that, I hope that helps explain how we think about the opportunity.
Yeah, for sure, very clear. I'd like to follow up one point very quickly before I'd like to hear Hampus's views. You talked about, obviously, venture capital historically being driven by division of the VCs themselves. Just wondering how hard, or maybe not so hard, was it to actually convince your own backers to believe that actually a VC can tackle climate change through hard solutions?
I mean, we're a very small fund, and we've seen much bigger funds manage to raise capital from LPs, and, you know, with the same sort of story in the US. And I would love to see more funds raising money from LPs with that story in the UK. And I think in the UK there is, you know, and there are many other markets as well, which I think are a little bit more conservative and don't have quite that, like, oh, we need to solve a problem, let's build a company, you know, that kind of mindset that they have in the US, especially in California. So I think, you know, it's important to reflect that, you know, we haven't been so ambitious in that way in the UK, and that's why we don't have so many enormous valuable tech companies here. So, you know, this is an amazing opportunity. We have fantastic VCs here. We have fantastic universities, government support. It's an opportunity for investors to say, right, this is our thesis, who's in, and find the right LPs. And that's, you know, that's what we're trying to do in a very tiny part of that story. Hopefully that part will get bigger so we can have an even larger impact.
Great, thanks a lot, Pippa. Hampus, what are your views on this aspect?
No, I think that was an amazing intro from Pippa. I think you covered absolutely most of the ground. I think that two comments that you didn't mention, Pippa, which I think are to add to that. One is that I think exactly what you said, larger VCs. When we set out to raise this fund, we actually were wondering what size of fund we could raise, just because of that. And when we started fundraising in very end of 2019, November 2019, we literally had to explain to people, especially in the US, that climate change was real. We had like very kind of very strange calls when we had to kind of talk about like, what if it's not real, then it's at least an insurance and whatever, and it's like, it was very strange conversations. But I think that then I think something happened in 2020 all over the world. Like we like the fundraise went a lot better in Europe in the beginning of 2020, and then like mid 2020 it felt like the Americans finally were like, okay, climate change is real and it's not controversial. So we ended up raising a quite large, slightly larger fund than we expected. So we're $100 million fund, so 86 million euro. I don't know what that is in sterling, but I think that it's like a regular science seed fund. And I think it was really surprising to see actually that shift 2019, 2020, and now 2021, we have a lot of questions from people asking. So like, I think it is changing very quickly. But back to your original question, the role of venture capital, I think that there's a massive role of it. And I think that I've worked in research, I've worked with like governments, I've worked with starting companies, I've worked in corporates. And I think there's one thing that a venture handles better than anything else, and that is that it's very, very happy to take risk. And I don't mean only financial risk. I think venture is also very happy to take like reputation and strangeness risk. So as a venture capitalist, you can invest in stuff that government would be very afraid of backing because it could be extremely controversial. So like as a venture capital company, you can invest in anything. You can invest in geoengineering and solar radiation management if you want to, whereas like tests aren't even allowed in like Europe right now because like we haven't really figured out what to do with it. So I think that's the main role I see for venture capital, is that we can think 5 years ahead, and not only like carbon budgets 5 years ahead, we can actually think about, so what solutions are going to happen 5 years ahead. And the interesting thing I found is that we have to think usually 5 years ahead because a fund timeline, it looks like that. So we can't, if somebody needs a solution today and there is no solution, like today, then we're usually too late out from the venture perspective. But if we think this solution is actually going to be needed over and like more and more, then it's really good for venture. So it is really ideal for changes like these, in a sense, that we can invest non-obvious things, take very high risk, and hope that one of these ideas actually going to pan out and be big.
Yeah, thank you, Hampus. I think the risk aspect is really important. I think, you know, VCs definitely fill a certain hole with that. And yeah, looking forward, obviously with climate forecasting and everything else, yeah, we do definitely need to think about what are we going to need as the climate changes. And we may not go into this today, but you know, it starts to broach things about, you know, climate change adaptation as well as mitigation in certain instances as well. So yeah, I'll come to you if there's anything you'd like to add to the already comprehensive answers we've had.
Yeah, maybe not to repeat. I think that generally the venture capital is an asset class. The duty of the venture capital is to take nascent technology and take it and bring it into a mature technology that you can deploy at scale. Now, there is a misconception around climate change that we already have all the technologies that we need. We have PV, we have solar, we're good, right? So one, if we talk about lithium-ion batteries and PV, for example, we're just reaping the fruits of the venture investments of the past, right? PV was invented in the 50s, lithium-ion in the 90s. Now, if we look at what it needs in order to scale, so let's talk about a real example. If you think about the Great Texas blackout in February 2021, so there was no solar, all the wind turbines were frozen, so all the intermittent renewables were dead. And in order to cover for the duration of the blackout, which was 2-3 days in a row, you would have needed, let's say, around 1.2 terawatts hour of storage capacity. Now, if we were to cover that in lithium-ion batteries, that would mean that it would take us 10 times the current global production of lithium-ion batteries. So that means that we're still missing technologies. And it's not just about grid scale storage, it's about low-cost hydrogen for long-haul flights or for cement production. It's about carbon capture. All these technologies that we need in order to prevent climate change, they're not there. And that's our responsibility as an asset class to take action.
Yeah, it's really helpful actually. Yeah, I think yeah, it's an important point. We need to keep innovating. Effectively, it doesn't stop when you've had solutions. There's another example I like to use, which is the wind industry as well, where I think a few years ago people said floating wind farms will not be possible, but those have now come in and are being really widely distributed in the wider seas. So yeah, it's an absolute lesson to say, yeah, don't rest on your laurels and keep innovating. So no, that's a really helpful I think overview of that topic, and I'd like to maybe dig under the skin of the VC model a little bit. So I think you've all helpfully explained why the general model is important. We need risk capital, we need to be looking forward, we need to keep innovating. Going back a little bit to something Pippa mentioned and Hampus has referenced as well, VCs operate with a certain model on a certain time frame with a certain risk return appetite, and I'd like to get your views as to how suitable is that to climate change itself. Is the standard model okay? Does it work, or does it need some form of variation when it comes to climate change? And Hampus, I'd love to kick off with you from there.
Yeah, so I would say there are two parts of that. I think one is, so there's no in two levels from me, and I think that the one no is about that a majority of things within the climate world have longer timelines, might not have like the 1,000 times upside, might not be able to, might need project financing and higher capex, which I think VCs shun like the plague. So I think that there is something there that I think that I'm very happy that the other people on the panel are working more with. It's something that when you're raising like a very standard vanilla 101 venture fund, LPs are very much looking for the cookie cutter VC model of what they want. So we are sadly pretty much out of that. If we mention real estate, like there's a long paragraph of why and how we cannot invest in real estate. And I think real estate people think, oh, of course, why should you invest in real estate? But so many solutions actually require land, for example, and we can't touch that, which is very frustrating. I think the other part, which I think venture doesn't work with, I think that venture has historically been an asset class where Facebook style, you move fast and break things. Like you look at your return numbers and then you're good. And nobody really cares if you kind of what really happens. And I think that I am not a very happy ESG camper. I think that the ESG model is really, really stupid, because I think that smart people can figure out to push anything into an ESG model. Like you can just, and all you can always blame that it's early stage and you don't really know. And kind of, as both Pippa and Caitlin said, like you can always say that we want to be with the pivots, right? But so that means that you kind of covered your ass in the sense that, like, well, I mean, we didn't know that it would pivot, like in a very irritating way. So like the ESG model is really weird. So I think for us is that I think just as Pippa and Caitlin said, I think we have a very rigorous way of looking at it, because we can't just fit in a sheet. And I think that, I don't know how many followed Tarek Fancy's, the guy who left from BlackRock, how he says like, if you want to get Goldman to stop doing something, then I mean, make it illegal. And I think that there are certain things I think the venture model won't do. It's just like, if we don't get a carbon tax, we won't change certain things. So I think that there's definitely things needed to drive innovation that venture won't do, and won't be able to do. And some of it is the structure of some funds like us, and some of us is the irritating thing that we just need legislation. So I'm a big believer in stop doing things that are obviously stupid.
Yeah, very fair, Hampus. And I think, yeah, it sounds like what you're saying is, what you do and what your fund does fits a very specific purpose. And you're not saying that it's comprehensive when it comes to everything climate change related, but that there are, or there need to be other actors to actually fill in some of the other gaps along the way.
And actually comment on that, I think one thing that I think that we as a group of people in general, I think that we have to be much better at is trying to explain to people what we want and don't want to see. So a lot of people ask us, it's like, oh, we're working with this carbon removal project, and we own land and we own a factory, and they say like 3 buzzwords that means that we can't touch them even. So then we look around as like, who should we send this company to, right? And thankfully, thanks having known the other panelists now for a couple of months, it's great, like, because this is what. But the problem is like that people look at our webpage and don't understand that we probably shouldn't be the right person for this email. But otherwise, of course, that every single fund needs to get better to explain this is what we're looking for. And it's really complicated, of course, how to explain that in a good way without like spelling out exactly what you want. I think that's the nice thing with, of course, Counteract, where you can say kind of very directly what you want. So I think that's the big problem. How do you actually explain what you can and want and like?
Yeah, fair point. And just so the audience is aware, when the panelists talk about LPs, they're talking about investors in their own funds, pension funds, other asset managers and institutional money who give these VCs the money to actually invest in startups at the end of the day. Yeah, I'd love to bring Yair in on that aspect as well. I know, yeah, you've got certain views on the model and the way you operate in this space as well.
Right. I think that we can do a lot of stuff in the model and talk about longer lifetime for funds, and because it takes longer. But I would say if we want to capitalize and more mobilize the big funds and the institutional money, then we need to stay within the model that they know, because otherwise it will be very, very hard for them to swallow. But one thing that I would ask is, I think that we need to change in the discussion. I don't want to be judged only the IRR. Today, venture capital is a pure financial product, and people invest because of that IRR, because of one KPI that you need to generate to investors. And we keep saying in the fund that we want to be billionaires, and not because we want to make $1 billion, but because we want to remove 1 billion CO2 out of the air. So, and I want our LPs also to think like that, and we want them to judge us according to that. If we're just going to generate IRR at the end of the lifetime and we're going to make money, we failed. And I want our investors to think like that as well.
That's helpful. Yeah. Does it influence the amount of financial return they're looking for in your experience?
No, I mean, this is a bigger discussion about the fact that climate change is the biggest business opportunity in history. I mean, the amount of money that is going to be invested in climate change in trillions of dollars every year is 2 orders of magnitude that was invested in the digital revolution that brought us Google, Facebook, and others. So the opportunity is huge. We're going to generate the new Shell, the new BP. These are the type of companies that we're going to see. So in terms of financial return, I'm not concerned at all.
Yeah, very good point. Yeah.
And actually, I have to pitch in there. Sorry, but just because you said it, I have to pitch in. I think a lot of people that I talk to are saying, but we cannot do these things without extending the timeline to kind of 20 years of a fund. And I just try to remind people what mainly the US did during the Second World War. If you want to look at the production capability that the US went from 1939 to 1945 on just producing things that are impossible to think about. If you look at the number of fighter jets, and try to figure out how complicated those things are to invent and build, and how many were at the beginning of the war when the US wasn't even thinking about getting involved, and how many were in 1945. So we can change things very quickly if we really care and the incentives are there. So I think it's not that we don't really actually need 20 years. It's most that people don't want to change. That's the problem.
Yeah, and look at what we've achieved in the last year, right? With in terms of scientific innovation, government support, companies collaborating, countries collaborating, and production on a massive scale, and also changing human behavior because we had to. So it's totally possible.
Yeah, I guess it comes a little bit back to Hampus's earlier point about an appreciation of climate change and the urgency of it. If we, I think, all treat it, and the actors who matter.
Right, and sorry to pitch in on this, but I feel like that's what needs to change. Is I've talked to lots of VCs in the UK and corporates internationally who aren't willing to invest in a big way in climate solutions until it's a dead cert that they're going to get money for that carbon that they're reducing. And they want to see the carbon price coming up or the government regulation being there for sure, and they're not willing to take that leap of faith. And I think some of the investors in this group are willing to make that leap of faith, because we're looking at this, what we see as being a dead cert of climate change, and in 2050 we're going to have to either suck that carbon out the air, or and let's look at the cost of that. Or so the companies that are able to reduce that carbon or suck that carbon, those are going to be fantastically valuable companies. And just because there isn't a dollar value that you can put into a financial model today that would be signed off by an auditor, doesn't mean that. So is that leap of faith? Nobody could guarantee that Google, Apple, or whatever was going to be successful back in 1998, but there were investors who were willing to bet on that.
I have to jump in that one now, because now we're just jumping in on stuff, because
Yes.
now Jonathan asked from the audience how important government policies such as committing carbon neutral pledge or carbon taxes are to do this. And I think that, just as you said, Pippa, it's absurdly important, because I mean, look at what happened in the US through the Biden administration, right? Like, it is like I have literally talked to like a lot of American friends, a lot of American companies the last 3 or 4 years, banging my head against some of these problems. And the second Americans know that, this is true, like they're signing the goddamn bill. Like first of all, it is legit. Like, it's people don't have to be, the people who are in the firm climate camp, they can now talk about it openly and not be afraid, because now, the head of the army says it's so. And the people who are in the middle, they can finally say, oh yeah, I actually think so. But the people who are just like, I don't believe in it, they realize they're going to get crazy subsidies and crazy fines if they don't. So suddenly, like, the whole boat just shifts. And I think that so that's one. And then I think the other thing is, there's so many problems that will be cheaper unless they're taxed. So look at plastics. The price of virgin plastic is dirt cheap. Like, it's dirt cheap. There's no incentive for recycling unless we put a carbon tax on it. Many transportation, many fossil fuel things. It is just like, it is as if we say that murder doesn't have a cost. And like, then it's just fine. If you're pissed off at somebody, go kill them. And I think that's one of the things we need to change. We need to, like, some things we actually don't want.
Yeah, it's a really multifaceted issue, and I think there's a lot of actors that will come into play in doing this. Interesting to pick up on what Pippa said about people needing to have a vision or needing to believe that this is going to happen. I think for all of you, I'm probably not taking a risk and saying actually it's very, very obvious for all of you. You probably don't feel like you're taking much risk at all in the fact that climate change is coming. We need to invest in those solutions. So yeah, I think it's a case of just accepting that it's happening, it's going to happen, and we need to do something about it. So Caitlin, I'd love to come to you just on this topic, and to wrap this up. Where does Counteract stand on this, and what kind of approach have you taken, and how did you think about the VC model when you were setting up?
Yeah, for sure. Thanks. And I might at the same time also answer Mary's question, which came in the top. So I came from a more typical VC fund that would invest in deep tech, and I'm now at Counteract, where we don't have an IRR target or a time horizon that we have to kind of hit a return within. And I think what that allows for, which is helpful in this space, and it's not the only way to help climate tech, but it is a way, is that it allows you to get a lot more involved in a stage where there's this chasm of investment between what's like a friends and family round, where it's super early, to where a typical VC would come in, where there's this expectation that you've got your product market fit, you know who your customers are, you've got the team, and then you just need to run at it. And so I think Mary's question in the chat box was, do VCs ever work with corporates, and how might this look? And there was a follow-up question saying, who wouldn't you want to work with? And there's some interesting VCs out there who actually partner with, so for instance, Wale Ventures in the States partner with Fortum, who are a big energy company, and they actually allow all investments from Wale Ventures to pilot within their facilities and then get access to experts there. And I think that can be really beneficial. And there's a lot of potential for industries such as oil and gas, which have been really bad for the environment, but want to do a lot of good, that you could say, okay, cool, you could partner, but not on the basis that it's going to be exclusive to give you a competitive advantage, or not on the basis that it's going to give you a green sticker that's going to make it look like what you're doing is good. So I think that would be what I would probably put caution to the one to just be a little bit cautious of. And then something else that is just more of a personal thing about the VC space is, it would be really awesome to see more crowdfunding opportunities. Like, there are lots of micro funds coming into the space where there's a big community that may not have enough capital to put in huge ticket sizes that are required of LPs, but could actually provide a lot of community support to the startups. And so it's really interesting to seeing some of those trends there.
And are you seeing some of those funds coming through, Caitlin, or trying to come through at the moment?
Yeah, so there's actually a group called Voyagers, which they previously did a health tech micro fund, and I think they're planning on launching a climate tech one. And I think most of the people on this call are actually part of that group as well. And what's cool about that is it's a way to network, it's a way for the investors and the corporates and the startups to all interact together as a community. And that's something that we're seeing overwhelmingly in this space, is that everyone wins if the climate wins. So everyone's wanting to pitch in and support it. And that's what's actually really uplifting about working in this space.
Yeah, actually on that, I think that the only space I've ever worked with in my whole life that is as collaborative, is actually was the open source web space. So like back in like beginning of 2000, there were a lot of people who were working with like open source web things like browsers and the web stack, and that was like an amazing community of people just saying, hey, I'm working with this, please help me out, because we all just wanted, you know, to be able to kind of have browsers. And nobody knew how to monetize the browser. So people just said, like, let's build it together, right? Mm-hmm. And then I think in most other industries I've been in, there's always like a question of who owns the patent or who owns the customer and everything. And in climate, that's one of the few things. I think I don't know how many Slack groups the rest of the panel is part of, but I mean, I think that I'm part of so many, and I get so many notifications. And like now, I was invited to another one, and I feel like it's so amazing that there's so much collaboration, but it is very, very noisy, but it is so good. It is so good. There people really want to float the boat and make sure this works. And I think that makes me so happy. And I think on microfunds, I think in the US, we have co-invested with, I think, 6, 7, 8 plus American microfunds that only invest in certain niches. Some do only food, some do only transportation, some do, and they're great. It's like sub $10 million funds. They're run by a person who has been in the space. They're very hands-on. They really help out, and they have a very strong opinion. Getting back to Pippa's original comment.
Can I jump in with one other thing I just remembered that I wanted to say on this as well is, and I think a lot of the panelists on this call do this too, is to have that hands-on help with the startups. That's something that that's our kind of core of what we do. And so the partners and co-founders of Counteract are serial entrepreneurs themselves. And so taking that experience of building companies and scaling them and applying it to the climate tech industry, I think can be super powerful and is kind of a different from the typical VC approach way.
Well, that does, Caitlin, actually nicely feed into my next question. So, one of the questions I have is kind of about all of you. So, you're all working in the VC industry or the investment industry, depending on how you might want to define it. And you're obviously all looking to tackle climate change as an issue. And we've talked about how the funds are set up. We talked about how they might be different or not so different from the standard kind of VC model or VC approach. I'd love to hear more about you as individuals and your colleagues. So, when it comes to VC, do we need distinct skills as investors when it comes to climate change? Are there certain experiences or certain elements of expertise? I know Yair touched on a little bit in his introduction, but what do we need? Is the same model, is the same skill set fine, or do we need something additive to what other industries or the general VC industry has? And yeah, I'd love to go over to you on that.
Thanks. So naturally, there are many skills that are needed, like any other VC. You need to know the subject matter, and this time instead of software, maybe it's more carbon capture. But I would say this is pretty much the same. But what is not the same that I've noticed is two things. One, you need to be more involved, as Hampus and yourself, you said, you need to be involved more in politics and understand where is the wind going, and ideally also impact that. So you need to have a little bit more of policy, lobbying, advocacy skills on board. This is one. And the second is, unlike companies in the software, I would say that most of the companies that I've been working in my previous life as a software investor, they were taking just equity. And occasionally there was some government grant and something like that. The companies we're working with, all of them almost are getting grants, all kinds of grants, Horizon 2020, Horizon Europe, and stuff like that, as well as project finance, because there is CapEx related, which we're not financing. So we do need to have more financing knowledge rather than just equity, and more know-how in terms of non-dilutive means of capital.
Thank you. Yeah. I think that certainly applies to already the hardware-related solutions that we need to see with higher capex and maybe longer times to fruition in some instances. Caitlin, you touched upon this a little bit in your previous answer. I don't know if you want to add anything to what you said earlier on this at all.
Yeah, for sure. I think I completely agree with Yair. I think understanding the problem is fundamental. So whether that's having a PhD in a topic that you then go and invest into, I think that's really helpful. That's not what I have. I have quite a mixed mash background, and that's proving to be quite helpful too, because having a mining engineering experience has actually come up quite a lot. But I think most importantly, or not most, but that something that is really helpful is as I mentioned, the partners of Counteract have experience in growing and scaling companies, and those are going to be loads of problems for the startup to scale. To be able to weigh in at those points, I think is a nice value add, in addition to all the points already raised here. And then I would also say understanding the customers, that the market that you are applying into would be another key value add that you can bring with your experience.
Yeah, thanks, Caitlin. And Pippa, I'd love to hear what you think on this aspect of expertise or specific skills when it comes to VC.
I think that most of what is needed is the same as the rest of VC. Like, you know, that you need to understand the area, you need to understand the financials, you need to understand how to run a business. Some VCs support their companies more or less than others, etc. You know, I think it's I don't think there's anything hugely different. I agree with Yair about I think the need to partner is very important in this space. So whether that's, you know, understanding and partnering with governments and other companies, you know, for example, the way that Innovate UK works in the UK with you know, companies forming consortia to deliver projects that can access non-dilutive funding, or whether it's you know, partnering with people for pilot projects and, you know, proving out the technology a little further down the road, that might be a little different from some other spaces, you know, like software.
Yeah, so it sounds like you're all saying there's a lot of actors which go into a lot of these solutions in terms of making them successful, but they don't necessarily all need to be within the fund themselves. A lot of it is outside actors or entities that you do need to interact with and engage with to make them work.
Yeah, I think that touches on the question that was it from Mary? Was put in the Q&A box that you know, I think we're all agreeing that a lot of these companies will need support from other companies, whether it's licensing or joint ventures or contract manufacturing, to get their solution through that path to scale.
Yeah.
I mean, I can say that I previously worked at a completely different fund that had a very different like view. Not now it sounds like they were anti-climate. I don't mean like that. They were just like not climate. It was a kind of regular deep tech fund. I would say that my job is exactly the same in many shapes and forms. I think that the hardest part of being a VC, so I'll caveat that and say, of course, if you take a niche and want to focus on that niche, you have to be really good at that niche, period. So that's very clear. But I think that one of the things about being a VC, which I think most people don't really understand, it is that you have to be very comfortable with not understanding anything and have to get up to speed with understanding that very quickly and be able to happy being comfortable being bet on something that you still don't really understand, and working with people that are very, very strong characters. So I usually jokingly say that my job kind of looks like I'm just running around in a casino and sitting down at the blackjack table, and people are just starting dealing me cards. And I pick up the cards, and I know all the card counting. I know how this game works. I look at the other players, and then say like an ace, a 10, a duck, a duck, and I'm like, now I have like 2 minutes to understand how ducks work in this deck. So like that's where we have like a research and insight person, so I can quickly like show the duck card and go like, okay, so should I bet, should I not? They look at the other players. And that's one thing I find many people who come into the venture from corporates, they want to see a good spreadsheet model. They want to read all the data on it. And the problem is, if you're in early stage, and like in climate, right, there's no research, there is no model. So like you have to realize that within a week, you just have to say, should we bet on this or not? And I think most people I know that have worked in venture for a bit and go earlier stages, they go back into later stages because they find themselves really uncomfortable with betting when they don't have the data. They want to play chess. And what they don't understand is that we're playing stress poker with unknown cards.
Yeah, really good analogies there. And I think those that are in the early stage ecosystem are there because they do enjoy it. In a way, you know, it's a bit of a risky game, as you say, very risky game in many ways. But a lot of people are energized by that and the amount that you do have to learn. I might actually just bring you forward on the next question, Hampus. So you were there, and you did mention the word niche as you talked about it. But when we do think about climate change within the VC world, you know, everyone breaks down VC into different sectors: legal tech, health tech, fintech, etc. Climate tech, to be honest, wasn't a word that was thrown around much even 18 months ago, but now seems to be thrown around, you know, off
too much.
Everyone's tongues, yeah. In your view, how do you see it as a niche? And if so, will it remain a niche in your view, or will it percolate into the wider industry?
Two answers. I know I can never be brief. One is I always try to tell people that if you haven't read The Expanse or seen the TV series, like on Mars, there's a third of people who work with terraforming, also known as climate change project, right? A third of them work with defending Mars from planet Earth, and a third of them work with services to kind of, you know, living and food and everything else. I think it's going to be very similar on planet Earth. I think that with the future we live here, with the fiction we currently have, I think that a large portion of humanity will work with climate change. I don't think that you will call yourself a climate lawyer or a climate farmer or a climate project manager. You're just going to be a project manager and like whatever. So I think it's going to be completely built into almost every single profession. So that's so in a sense, no. And I think that they're. Now I lost my other answer to the same question. What was your question again? Your question was if,
you know, will it
percolate? No, exactly. Yeah, exactly. Thank you. Sorry, now I got it. And the thing is, so we have done 12 investments so far. We've done in like clear fintech. We've done in food tech. We've done in transportation stuff. We've done robotics. We have done, what else have we done that are very different? We've done in satellite stuff. So like we have already like, and we've done B2B SaaS, like I think, and we look at our co-investments, we've co-invested with B2B SaaS funds, with energy funds, with transportation funds, with consumer funds, because we've done consumer stuff, with food funds. So I think that already within the coming, like the first 11 months of our fund, we've already like done so many sectors. So I don't think it's a sector. I think it's everything.
Yeah, and in a way, if you're co-investing with funds who describe themselves as sector experts
solely as a sector, yeah,
they're being pulled into climate in themselves by definition. So yeah, really interesting examples. Don't know, Pippa and yeah, if you'd like to opine on this and add anything else as well.
Yeah, I mean, I agree with Hampus, and you know, we were both on a call last week where I said the same thing, so apologies. But you know, I think that in 20 years' time, it will make as much sense to say, you know, to say that you work in climate will make as much sense as saying that you work in capitalism. There will just be an understanding that this affects everything, and everything needs to change. So the way that every single business operates will need to change, and you know, what most of us are focusing on as VCs and entrepreneurs are like new technologies that we think are needed for that future. But you know, there's obviously, of course, huge businesses in helping all consumers to change their behavior in a way that will be needed, or helping all businesses to change their behavior in a way that will be needed. So you know, I think everybody is going to have a part to play in that, whether you're in, you know, whether you're involved in accounting or law or marketing or whatever, everybody will have a role to play in this transition. It's the industrial evolution all over again, and it will affect everything and everybody. So, I don't think it's niche, obviously, and I think that within a couple of years, if there's any VC or any finance vehicle anywhere on the planet that's not talking about climate risk as part of how they evaluate an opportunity, they won't be getting support from their investors for very much longer.
Yep, that'll be good to see, I have to say. Yeah, I'll let you come in.
Yeah, so 10 years ago, exactly 10 years ago, Mark Andreessen in 2011 said that software is eating the world. And I think he was very right for the past decade, but the next decade is going to be sustainability is eating the world. And we used to say every company is a software company. Now every company is a sustainable company. And so the next decade, we will see that, like my colleague said, this is going to be embedded to the DNA of every company. If you're not going to be a sustainable company, if you're not going to be a VC that is looking at sustainability, you're not going to have no investors, no customers, and actually no talent that wants to work for you.
Yeah, very, very fair points. Kind of see pressure on climate change come from a lot of angles in the corporate world. Your last point about employees is, I think, an underappreciated one. Where
I comment on that actually, which I think is I can go completely furious when people talk about impact funds. I think that, like, what we're saying is that certain funds are supposed to do good, and we brand them differently and we measure them harder. And even the new like EU rules around this requires like more documentation, everything. I try to explain to everybody who asks me anything about that. Every fund is an impact fund. Some don't give a flying fuck about their impact. Some really do. And I think that we really sort of put a lot of restraints on the people who seem to care. So I think that it's like we're still in this absurd situation where like you're at your favorite vegan restaurant and you find out that one of the things has like a strain of cheese because somebody had cheese before, and you're furious and write on Facebook, on Twitter, and you hate them. And then you immediately go to McDonald's and eat. And you have no complaints of McDonald's just like doing what they're doing, right? So we put such extreme high bar on the people, startups and venture funds and green initiatives, on them being like holy saints. And I'm not saying actually this because I'm like being attacked. I'm just saying because I'm so pissed off that we require so much of the startups. We require the startups to kind of document a lot of stuff and report a lot of stuff. But if you're a normal venture fund and investing in a thing, you just want, how many users did we acquire? We talk about acquiring users, we talk about customer acquisition costs. We never talk about, we never ask other companies of like damage they created. Sorry, irritated rant.
Yeah, it's an interesting point. In a way, we almost need to make it easier for them, not more difficult, given what we need to do. And there's a whole load more things on our accelerator. We're spending a lot of time dealing with responses from certain investors of our startups. They want to see a full life cycle analysis, lots of other kind of wide-ranging assessments, which often the startups can't even afford to run in certain instances. So yeah, it's a really interesting aspect actually. At the end of the day, I think every company, when everyone focuses on this, will have to do that. But at the moment, we do need to lower some of the barriers to bringing them forward. It's really interesting perspectives. Before I go on to the final question for this session, just like to remind the audience, we've got a dedicated Q&A box. If you do have questions, please do write them in there. We've got 30 minutes after we conclude this discussion to answer any questions you have. So please go wild. Anything you want to ask or talk about, I'm sure our panel members would love to answer. So on the final question, I'd love to open this up to everyone, and looking forward to ending on a positive note. So I'd love each of you to talk about an investment that you have made recently or are thinking about making, which really excites you, and where you think the potential to tackle climate change is actually quite significant. Who wants to go first?
I will.
Sure.
So we have made an investment into a company called Sequestrate, which is an accelerated weathering play, which essentially has two engineers who have developed a continual pressurized reactor that takes a concentrated stream of carbon dioxide and puts it through this reactor and accelerates the weathering of carbonate rocks to make a bicarbonate that can then get put into the ocean, and that helps with ocean acidification and nourishing the sea life there. And what's been super exciting to see is not only can this help hard to decarbonize industries like cement and steel making, but also since the inception of it and announcing the investment, the level of engagement from the likes of Stripe and big funds in the US who are so keen on just seeing solutions in this space is really encouraging. But yeah, I'd love to hear from the rest of the panelists as well.
Fantastic. Yeah, it's a good point. We have talked about the tech giants on a few instances, and it's yeah, maybe for another discussion, but it's interesting to see what they're now doing, and maybe in some ways leading the way in certain other aspects of climate. Yep, open to anyone else who'd like to come forward next. Pippa?
Yeah, I'll jump in. So we've made 4 investments from the fund, and we love them all. One that I'll talk about today is Phycobloom, which is it's a very early stage company genetically modifying algae to produce biofuels more cheaply. So if they can get it right, we can produce sustainable aviation fuels more cheaply and with less impact than crop biofuels or electronic fuels. And address that 1.5 gigatons from aviation, which is going to be really hard to get rid of any other way.
Fantastic, thank you, Pippa. Yeah.
Next. So at BeyondBlack, we're very excited about geothermal energy. To those who don't know, geothermal is probably the most underutilized type of renewable energy. And the interesting part about it is that it's not intermittent. So you can potentially have it 24/7, 365 days of the year. You can use it as a base load. It can be sourced at the point of usage, so you don't need transmission lines. The only problem is that you need to dig, and you need to dig deep in order to get it. So that's why today, where we see it in California, in Iceland, Indonesia, these are places where you don't dig deep. The problem is that if you need to dig deep after beyond 5 kilometers or towards 10 kilometers, and then if we do that, we can find energy, geothermal energy, basically anywhere in the UK, in Munich, anywhere you can find geothermal energy. But the problem is that after 5 kilometers, usually you run into hard rock. And that's where the oil and gas usual methods, the drillers just break. And if they break at 5 kilometers, then you need to take everything up and then again down. The cost is just exponentially exploding. That's why we invested in a company called GA Drilling that is based in Slovakia, in Bratislava. And they developed a plasma-based driller that basically doesn't break. And that enables the ability to dig beyond 5 kilometers and potentially deploy geothermal energy anywhere.
Fantastic. I think lots of really, really exciting innovations being seen, and I think we'll see many more. So thanks to all the panelists so far. I think that brings to an end the formal kind of discussion around the topic, and it's great to get a range of different perspectives. We'll now jump to the audience questions. I'll look at the ones that are already open and
we have answered most in the meeting.
I've seen that, yeah. So I'll just pick up on any that anyone else may want to add to. But there's one open one. Sorry,
I'm gonna jump in because I think that I wanna take a company which is different from the others and talk about, because I think that one fear I have is always that people are thinking about climate companies. They think they have to build fusion reactors or super lasers or plasma or know exactly how certain minerals work or be in a lab. And I'll just take an example, which is a company we invested in. And I think that I never when people say mention one company you love, I always exactly say what Pippa said, we love our children. But I mention this company not because they're the best or anything. What I mention about them is they're very different from the other examples. So we invest in a company that they buy satellite imagery. They don't have satellites, they buy satellite imagery, and they use that to calculate how forest is developing and standing. Completely machine learning, all software. They're helping utility companies, the ones that have power lines in large forests. They're helping them to reduce their vegetation management cost. So cutting trees around the power lines. Most big utility companies spend somewhere around $200 to $500 million, most of them more, in just cutting the forest around their power grid.
Wow.
So when this software solution comes in, they usually reduce that cost with 15, 20%. So it's like Scrooge McDuck will just look at it and say, what? I don't need to believe in climate change. The CFO of the utility company can just save money by using this. And the thing is that a massive amount of forest fires are started with a quote unquote interaction with the grid. So it reduces forest fires, which of course are a huge emitter, more than 1% of CO2 emitted. And the CFO of the utility company, he or she doesn't have to believe in climate change. And best of all, the team of mine, they don't need to kind of come from, agro or trees or tree cutting. They're software people. And I think like the reason I mention it is getting back to Pippa's comment is that everybody can work in climate change.
Yeah, really good point. I'll build on that very, very quickly to say, in our accelerator, we're seeing a lot of similar things where maybe smart, ambitious young people want to start up or build a company, want to do something, entrepreneurial. Maybe 5-10 years ago, they would build a fintech company or a social media startup or something of that nature. Many of those same profiles, same types of people are now actually coming and building climate change solutions. For them, it's a challenge, it's an opportunity. It has the benefit of obviously serving a wider good, but at the end of the day, it's ticking the same boxes that entrepreneurs want to tick, which is, build a business, drive change, and actually go out and influence things. So yeah, really interesting aspect to discuss. One of the questions I'll throw over to Pippa is from an anonymous attendee, but they have asked, with the global move to support the hydrogen economy, which sectors of the industry do you see will support transitioning economically to hydrogen itself?
Yeah, I think this is a really interesting one because it's an area where I think everybody agrees that hydrogen is going to be a really important part of solving climate change issues. And there's lots of different areas where it's kind of uncontroversial that it's going to do that. And I think, companies that are already large in those spaces will be playing a role in supporting that transition. So transport companies, some heavy industry companies. But the more controversial bit is actually that all of the huge oil and gas companies are loving hydrogen as in the same way that they are loving carbon capture, because I think they see it as a little bit of a way to continue operations as normal, but make some new revenue streams or just get a green sticker for what they're doing. So I think it's an area where we need to be really, really careful about who we're partnering with.
Sure. If there's no one else who wants to add anything, I'll move on to another question. There's one from
I have a comment on that. I think that I want to latch on what Pippa said in the end. I think exactly as you said, there are many areas which is completely uncontroversial. One big headache I think I see happening the last year or 2 years even is that a lot of big petrol companies, Toyota, for example, mentioning one, is they're trying to delay their change by talking about hybrids and hydrogen cars. And I think that you see that again and again and again in so many companies, that they're flagging a thing and saying we're focusing on this instead of just taking the plunge and moving to the technology. And I think that look at UK now, when it's like hydrogen cars are suddenly stupidly environmentally friendly, and look at those cars and ask yourself is, can you turn off the killing engine that like eats the sort of the bodies of decomposed dinosaurs, and can you turn that off and still drive around? No, you can't. So not even plug-in hybrids are that. So like I think that UK is now, I don't know who paid whom, which lobbyist got the UK to kind of go and say hybrid cars are environmental.
Oh, I know.
They're not.
We actually lodged a complaint with the Advertising Standards Association about all of the adverts for self-charging hybrids, and it's like, what do you think they're charging themselves on? Magic? Like, no, it's petrol. So like, it's very frustrating to see that kind of misinformation being propagated by to consumers, because it just creates doubt, and well-meaning consumers are going out and buying hybrids because they think they're better, and they can actually be a lot worse because you're lugging around batteries and an engine. And if you're not plugging it in, then you're just using petrol, and it might have better fuel economy, but it's not solving the problem. So it is frustrating to see there being not better regulation around that. I know, as a financially regulated body, there are very tight controls around what I'm allowed to say about our fund, rightly so. But I have to prove that everything everything I say has to be backed up by proof. And I wish that same standard was applied to journalists and marketing companies.
Yeah, it's crazy. It's complete crazy.
Yeah, no, thanks for those answers, and I'm really proud of our great panelists. No one's resorted to using the word greenwashing, but everything's been explained really, really well for our audience. One question there, which I'll answer because I think it was answered earlier by all of the panelists. Jonathan Lolainen, do you consider changing legislation or rules into the future during investment, or are you constrained by current rules in making those investment decisions? I think Pippa and a couple of the other panelists talked about this, where there is a frustration, I think, in the space where there are some investors who are relying on rules to be changed before they actually make investments into climate, because they want that certainty. I think the view of the panelists, I think it's a unanimous view, is that if we wait for that to happen, then we're simply waiting too long. And actually, the role of risk capital is to actually think ahead and anticipate those changes and invest on that basis. Before I go on to some of the other questions, we actually had one in advance from Philip Jarvis. And if any of the panelists want to answer this, please feel free to step forward. The question is on how can we encourage more investment support for industrial machinery ventures that can have a massive and immediate reduction on global energy use and emissions. Philip goes on to give an example of a company called Counteract, which he says could reduce CO2 emissions equivalent to 22 million mature trees.
So I'll have a first bash at this. I've met Philip, and he's involved with Counteract. I think it's really important to emphasize that it's really hard to raise money for any entrepreneur. It's really hard for them to find the right partner. It's really hard for us to find the right companies that we want to partner with that fit our thesis. So there will be many sources of funding open to every company, and finding the right one that fits your company, the stage that it's at, the story that you have to tell about your future. It's hard to find the right partner. I would argue that we have pretty awesome support in the UK for various different industrial challenges that fit with the UK's long-term commitments on climate change. That there are many areas in which I think they could do more, but I think that kind of non-dilutive funding is a great place to start. And then looking to investors that have a risk profile and an investment thesis that matches what you are trying to do with your company, and that applies to all companies.
Thanks, Pippa. I'm going to pick on a question from James McDougall. So, how do you ensure competitive returns for the investors in your funds when compared to VCs that aren't limited to a climate focus? Is impact enough to draw investment to VC funds, and how do we ensure climate funds survive if there is a delay in returns? I'm not going to open up the box again, and I know Yair and Hampus did touch upon this, but I've seen Pippa unmuted herself, so perhaps she wants to add something to the topic.
I mean, just we're starting to see it coming out in all of the data that what we're saying that if you're not thinking about climate risk in your investments, then your investments will not perform as well as the average of the market, and that is starting to come out in the data of fund performance. So it's stopping being this question of like, oh, you have to have concessionary returns if you want to invest in impact. No, this is like, if you don't get behind this message, your portfolio will not be worth as much. And on a personal level, I can talk about our personal investments are all in at least ESG screened funds. And when the recession hit last year, we didn't go down as much as most people because there's no big oil in our portfolio, right? And we were able to capitalize upon that and move quickly and kind of bounce back. So I think we're seeing that, and it was very graphically played out last year.
Yeah, and I think to that point, I mean, the risk of stranded assets, risk of carbon tax, like it's risk of, as Yair said, employees leaving. I think the risk of holding anything bad for climate is going to be crazy big. And most climate companies aren't like weirdo companies doing one thing. They do the exact, many companies do the products you look around you. They're just betterly made.
And I just want to come back to Pippa's comment earlier, which I really liked, is saying that I work in climate would be the same as that I work in capitalism. And I think it draws on something that there's more value that's being placed in more than just finance. And so I think that kind of resonates here, as well as, yeah, I think that going forward into the future, everyone is going to be wanting to put their money into it. So totally agree with all of the above.
Yeah, great. Thanks for adding that, Caitlin. There's another question which Pippa is writing an answer to, but Caitlin, you may want to answer out loud while Pippa does that as well. There are carbon removal startups like Climeworks, Carbon Engineering, Carbon Cure, etc., who have shown highly potential pilot scale working plants. However, the funding they've raised so far is less than 100 million compared to other companies like other software companies like Stripe, etc., who have raised 300 million plus. I've lost the rest of the question. I'll try and find it back. But I think the gist of the question was basically, why are software companies so easily able to raise so much money, yet these companies who are tackling hard solutions are not? And Caitlin, we'll start with you and open to any other panelists that may want to answer that as well.
Yeah, for sure. I think it's a great question. I think that we've touched on it quite a few times in this panel, that typical VC has revolved around software solutions, and that's a model that's very well understood, and there's lots of metrics that you can forecast from a very early stage to predict how it's going to grow, whereas hard tech companies, which still have to prove out a lot of pilot projects, they need the data, they need a lot of things to hold true to grow in value. It's going to take a longer amount of time, and I don't think that that's a bad thing. I think that we should actually be trying to protect these companies from scaling too quickly that they will potentially crash, because it requires time to actually foster the right pilot so that it can grow exponentially, because currently a lot of those companies, whilst they are doing great things, are still relying on things like natural gas. They're pulling out natural gas from the ground and then just splitting it out and taking the carbon from it. And there are some amazing solutions which are very, very early stage, which can do it for cheaper and way more environmentally friendly. So I know that those companies are iterating on their designs to make even better solutions, and I think the best solution from that would be to wait till it's at a stage that it can scale before doing it.
Great. Yeah. Yeah. Would you like to add anything there?
I think some of those companies did raise a significant amount of money, but it is still frustrating that I agree that software companies are just, if you're just doing, e-scooters, then you're going to raise a lot of money, and don't get me started. But companies that really do good for climate are finding it difficult. But to the point, it's always a challenge for us as an investors, especially those who are looking at hardware solutions, is to find the right point in time that you say, okay, now is the time that the technology is ready for prime time, and going from the lab to the market. And going to the market means that the price point, for example, that you're at, it starts to be interesting and competitive. because otherwise if you don't have carbon tax and stuff like that, and talking about what we said before, and we don't like to rely on subsidies. We relied on subsidies in Clean Tech 1.0, and this is how I got my gray hair. So we don't do that anymore. So if you are looking at a company like in carbon capture, for example, I mean, we see a company that the cost per ton is still at $600 per ton, and we need to get to $100, then it's probably still not a good investment for the VC if we have a lifetime of 10 years. But if we see a company that is at $200 ton, then probably the path to 100 is shorter, and that could be something that is more fitting to us. So that's how we look at these things.
Great, thank you. There are no more open questions. I'd like to throw one final one in of my own before we go to closing remarks. Just picking up on something Hampus said in one of his very early answers. So if we look forward 5 years from now, what do each of you, if any of you would like to answer this, what do you think the VC industry looks like? When we compare it to today, how are things going to be different in 5 years' time, in your view? What will the landscape look like in terms of funds, in terms of startups, in terms of the types of things you may be investing in as individual investors?
I can say on the broad landscape, I think it's going to look pretty much sadly the same. I think it's going to be enormous amount of funds that are doing exactly what they're doing. They will not have changed. We will not have harder regulation. They will do exactly the same. And I think that I think they're going to be more like early stage climate funds. They're going to be more funds that niche on one certain area. I think we're going to see actually more funds that look at one certain area within climate change more and more. But I would say if you go out there and survey most venture funds in 5 years, they will have an ESG practice, blah, 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 blah.
Thanks, Hampus. Pippa?
Yeah, I think certain things will get more acceptable for the mainstream, like cross-sector VCs to invest in as the regulation toughens up, and as it becomes increasingly obvious that the financial mechanisms of the market are kind of all aligning around this huge effort, and all the people are too. So I think that will make it more mainstream, if you like, to talk about climate tech investing or climate investing in general. So I think those VCs who are willing to take more of a risk or have a stronger vision will specialize and will get more edgy, if you like. So as Hampus said, perhaps specializing in a particular niche area, or focusing on something that's a bit further out that perhaps we don't have great visibility on yet. So maybe there'll be, maybe in 5-10 years time, we'll feel like, oh, we've really solved energy and transport, and everybody's going to be looking at food. So it might be that we've given up trying to solve food in 10 years time, and we're all just focusing on carbon capture and saying, forget it, just keep the cows. So I think there will be different ways in which this plays out, and but yeah, I definitely think the VC industry will still be there, will still be broadly the same, and we'll just be factoring in the different risks to the extent to which they become more dead certs.
Great, thank you. Thank you both for that. Yeah, I'll let you respond to that question as well, and also invite you to make any closing remarks on the topic that we've all discussed today.
Yeah, so I don't know what the VC industry is going to be like in 5 years' time, but I know that in 10 years' time, in 15 years' time, I would like this panel to look back and say, one of our companies is a gigacorn, is a company that is a unicorn, $1 billion valuation, and abated a billion of CO2, so 1 gigaton. And I think that among the members of the panel, we have a very good chance to achieve that. And if we do that, then we reduce 2% of global emissions. And then we're good.
Could I add, I know it wasn't directed to me, but I'd also love to add that I think that kind of tying in with things like TCFD in the UK, Task Force for Climate-Related Financial Disclosures. There's going to be a lot more transparency in financial products, and there's going to be more empowerment for the LPs or consumers to compare like for like with different funds or different companies. And so I'm hoping that with that empowerment of data, there's going to be a lot more movement towards the funds and the companies that are doing better for the climate, because as you say, 10, 15 years down the line, we can't be here discussing like what's going to be happening, because we're going to be seeing like cities being flooded if we don't act now. So yeah, it's inspiring to be here all together talking about it, because I'm sure there'll be a lot of great progress.
Fantastic, thank you. And I would, yeah, for the panelists as a whole, I'd like to invite any final comments. You know, I think we've had a good discussion on a number of aspects of the venture capital industry today, how it relates to climate, how, you know, various aspects need to change and are changing, but actually certain things will actually not change, even looking 5-10 years into the future. And also, if anyone has any words of advice for the audience members, I think we have quite a broad audience and a wide range of experiences, but I think a number of the audience members are also MBAs and maybe budding entrepreneurs and investors themselves.
I think I have one comment, which if I could like send out a message, I think that one thing frustrates me quite a lot is that the climate movement is very, very nice. People are very, very nice. People are hoping for someone else to solve the problem. I wish people get more angry. I wish people feel less like victims and do more things. I think that if I could recommend reading one book this year for you, it is reading How to Blow Up a Pipeline by Anders Malm. It's an amazing book that talks about how some of the biggest progress changes we've had, the women's suffrage movement, the civil rights movement in India, and Malcolm X and Martin Luther King's change in the US, how we all believe that those movements were very, very peaceful, and how the history actually shows us that they were not actually very peaceful. They were very, very violent movements that destroyed a lot of property. And only when they started destroying a lot of property value was actually the time that regulation actually moved in their direction. And the conversation started to be with the parties that want to change. So I would recommend reading the book. It's called How to Blow Up a Pipeline, and it tells you to be less nice. And I think you shouldn't be. You should vote with your feet. You should vote with your money. You should vote with what job you have. And you should not sit still and wait for a government to fix it for you, because they won't. They won't. They're paid by the wrong people, and they're afraid you're getting outvoted if this isn't controversial. The CEOs of big companies won't do it because not enough shareholders, not enough employees are doing it. So like we all have to move. We all have to say no more.
Fantastic. Yeah, How to Blow Up a Pipeline. I think everyone will remember that title. Look into it for sure. Pippa?
Yeah, I completely agree. I think that this is an area that everybody can do something about, right? So whether it's, you know, and it's not just people who have money or resources or work in climate, you know, everybody can eat less meat. Everybody can move where their pension is kept or where they bank. Everybody can talk to their friends and neighbours about how they're voting in their local election and get out and campaign for somebody who's actually going to make a difference. And we need all of the above, right? And we need the people who are going to switch careers, the entrepreneurs who are going to change their technology that they're focusing on so that they can have an impact on climate, the financiers who are going to go to bat for you know, for building this risk into their model, and the people who are, you know, brave enough to work in government and tackle this at a policy level, which I know I don't have the temperament for at all. So, you know, it's going to take all of the above, and, you know, I have faith, and I'm optimistic that we are gradually turning around that super tanker, but, you know, we all need to do what we can to turn it around faster.
Thank you. And Caitlin, any final words to add?
Yeah, I mean, you guys have said it all, but I think one thing that I would add is just to encourage everyone to ask why a lot, because yeah, there's so much that I feel that I've learned just by saying why, or why not, why can't you do this? And I think in all those instances, that's a way of like self-discovering what resonates with you more. And I think we all need to go on that journey, and it looks like a different shape and size for different people, but we all have the power in our votes, as has been said.
Fantastic, and Yair gets the benefit of the final word on this one.
Thanks. So maybe I'll just add to that everybody needs to be climate literate, and you need to understand the literacy. And if I just ran a random poll and ask people what is the carbon emissions of the UK, people will find a hard time. And how much is a car, and how much is a cow, and what do I do if I eat vegan? Do I change the world? Well, not so sure if you fly somewhere. If you fly to Ibiza and you basically the clothes in your suitcase emit more than your flight. So you need to become more literate, better literacy on what are we doing, and what is it the world that we're working in, and where do the emissions come from, and what can we do in order to abate them.
Sorry to chip in one more time to second book recommendation, and a bit more mainstream and accessible, but the Bill Gates book I think is fantastic place to start for that climate literacy. He's obviously got a very analytical brain, and there's a lot of facts and figures and numbers in there, and I really agree with a lot of what he says about how to frame this problem and how to think about new technologies and new policy in this space. So that's a really good place to start if anybody's kind of still doesn't know the answer to any of those questions. But yeah, just put out.
Fantastic.
A comment on the book. Sorry, comment on books. I think that one thing I'm really afraid of is that there are kind of like three circles in the Venn diagram of books. You have technology will solve the problem, you have behavior change will solve the problem, and you have the system change will solve the problem. I would really recommend to make sure that people read at least one book from each camp. I know a lot of people who've read one book and they say, if we're all vegan and we all fly, we all stop flying, and we all do this, it's going to be fine. And then have people say, as long as we just destroy capitalism, it's going to be fine. And then have some people who say, as long as we just bring out nuclear, it's fine. And I think that read 3 books, read one of each camp, and then make your own opinion. Because sadly, it's complicated. It's more than that. And I think we need to do all 3. We need to definitely to stop butchering animals and eating them. We need to kind of stop burning the dinosaurs to fuel our cars. There's so many things we need to stop doing, but most importantly is we need to start doing things as well. We can't get there by just stopping doing things, because then we're just going to starve ourselves to death.
Yeah, I think that's sound advice for life in general. Take a broad approach, and try and appreciate a range of different perspectives in informing the way you think about the world, and obviously climate change in this instance. So look, a massive thank you to the panelists. I know it's been a lot of time out of your day in the evening. So really grateful for all of you joining, and very thankful for your time as always, and thank you for the audience as well. It's been great to have you. Really interesting questions. We hope they were all answered, but if there's any that you want to follow up on, or any that people weren't able to ask, please feel free to email the team, and we'll make sure to get back to you. As a reminder, Enterprise Tuesday will return next Tuesday. We are going to have a guest speaker. We're going to have Sir David King. So we look forward to seeing all of you then. And I'd like to wrap up here and wish you all a good evening.